And still to come in the program, we'll take a look at warrants as a form of investment. Back in 2 minutes. Stay tuned. Time now for our interview of the week. Shares of China's largest lender, ICBC, made their debut in Hong Kong and Shanghai today. The IPO saw strong demand, but for Singapore investors looking to catch some action in ICBC, warrants might have been their only way. But how should investors approach this form of investment? Let's find out. Our guest tonight is Mirriam Macwilliams, a self-made millionaire and chief trainer with the financial education mentoring organization Wealth Mentors. Hi Mirriam, welcome to the program.
It's a pleasure being here, Gerard.
All right, we're talking about warrants today, and they are volatile investments and are generally regarded as being more suited for short-term traders. Should retail investors even consider this form of investment?
You had it right. It is a volatile instrument. I mean, actually, any highly leveraged instrument that carries an expiration date carries a measure of risk that may not be suitable for the average investor.
All right, so when trading in warrants, Mirriam, how different will your investment strategy be as compared to trading in stocks?
Well, if you were to own shares of a company, then of course the amount of time that you would invest in monitoring the position would vary. I mean, you can monitor your shares periodically, but if you purchase warrants, I mean, these are not instruments that you're going to purchase and then place in a shoebox underneath your bed. This is something that you have to consistently monitor. You need to recognize that a small movement on your share is going to represent a magnified movement on that warrant, and you may end up with a loss that is greater than you may have anticipated.
All right, Mirriam, a sizable fifth of structured warrants listed on the Singapore Exchange are based on foreign shares and indices. In particular, warrants on Hong Kong and China plays a dominating interest. Do you expect that trend to continue?
Yeah, I was reading about that, and I can see that that may be the case because wherever there's the highest level of liquidity, interest generally follows. And you know what? That does become a good thing. You have a choice. You can either participate in an environment in which there's low liquidity, shares barely move, and it is difficult to make money in these environments. But when you have the ability to be able to participate in highly liquid environments, share prices have a tendency to move, and the probability of making money is just a little bit higher.
All right, Mirriam, at this point, let's talk about warrants on the world's largest IPO, the Industrial and Commercial Bank of China, or ICBC. Now, the warrants allow local investors to participate in the IPO action, and the reception was indeed overwhelming. But the Hong Kong Stock Exchange now allows banks to issue warrants on the same day that ICBC lists. Do you expect interest to flow back to Hong Kong?
That could happen. I mean, let's face it, this is somewhat unprecedented. In actuality, the largest IPO in history. And it is somewhat unprecedented that warrants are also being rolled out at the same time that the shares are being made available to the public. That's somewhat unprecedented. So I believe that that probably is going to cause there to be quite a bit of interest. Again, a large interest generally creates a highly liquid environment, which becomes advantageous to the investor as trading becomes somewhat transparent. So, yeah, if they can take powers away from the over-the-counter markets, then that's where the interest is going to go. I see that interest possibly growing there.
All right, thank you very much, Mirriam, for your insights. I've been speaking with Mirriam Macwilliams from Wealth Mentors.